Have you ever wondered why so many diversified retirement portfolios still crashed in 2008 and again in 2020? Well, meet Harold McKinney. He's a 67-year-old retired engineer from Scottsdale, Arizona. Thought he'd done everything right. He had a multi-asset portfolio, stocks, bonds, even some REITs. But by March 2020, he'd lost over $215,000 in just 6 weeks. He called his advisor in a panic. You know what he was told? Stay the course. That was the exact moment Harold realized he wasn't diversified, he was just exposed. And he's not alone, because right now, 2025, we're watching inflation quietly eat away at savings, banks close branches across the country, and uncertainty loom over the next presidential election. The Fed's balance sheet, it's ballooned past $8.5 trillion. Just last month, the Wall Street Journal ran a headline: investors rush to safe havens as rate cuts delay economy stalls. This isn't fear-mongering, it's reality. But here's what Harold did next that changed everything, and why more and more smart American retirees are moving part of their portfolio into something you won't hear about from Wall Street advisors, but has quietly outperformed for decades during market chaos. Stick with me, because by the end of this video, you'll understand why multi-asset portfolios that actually work almost always include this one thing. Let's get into it. Now, the traditional idea of a diversified portfolio goes like this: 60% stocks, 40% bonds. Maybe you toss in some real estate or international funds. But here's the problem, Balik. When everything is tied to the same underlying system, central banks, interest rates, and Wall Street sentiment, your diversification is just a house of cards. That's what Harold realized too late in 2020. So he made a bold move. He rolled over $523,000 from his IRA into a self-directed Gold IRA. Not all of it, just a portion, but that move protected the rest of his savings. When tech stocks dipped again last year and regional banks faltered, his portfolio barely budged. Why? Because gold isn't just a hedge. It's the counterbalance to paper assets. It doesn't need a bull market to win. It wins when markets fail. And that's the secret most retirees never hear until it's too late. Now you might be wondering, is it complicated? Is this a sales gimmick? No. In fact, this whole story started from a free guide that Harold requested, a simple educational resource about how gold IRAs work. No pressure, no gimmicks, just clear answers to the question we all should be asking: how can I protect what I've already worked decades to build? If you're an American retiree with $100,000 or more in your IRA or 401k, here's what I want you to do. Take 30 seconds and grab the free Gold IRA guide using the link below this video. You'll also get access to a one-on-one call with a real expert. Again, no obligation, no sales pitch, just education to see if it's right for you. Because your retirement isn't just about you, it's about your spouse, your kids, your legacy. You've already put in the hard work. Let's make sure it lasts. Don't wait until the next economic shock to find out if your portfolio actually works. Find out now. That's it for today. If Harold's story struck a chord with you, don't ignore that gut feeling. Click below, get the free guide, and start the conversation. Your future self and your family will thank you. See you in the next one.